Hello and welcome back to Dukascopy TV. I'm Natalie MacDonald. Now it's rate decision week and joining us in the studio now is Jean-François Owczarczak of MJT to discuss some of your favourite pairs. Jean-François, thank you very much for coming in.
Hi Natalie, thanks for having me back.
Now we've got a really big week this week with several central bank rate decisions. We've also got budget talks, we've also got NFP Friday. Should there not be a US government shutdown? What are we seeing in the charts?
Well, usually when you have that much news, you're going to try to concentrate on the charts because it's just too complicated to try to outguess the different outcomes. And so here we are on our mosaic where we have our main drivers, i.e. the Australian dollar against the US dollar, the euro dollar, the cable, gold, US dollar Swiss, US dollar yen, 3 months S&P and 3 months treasury bonds. And maybe we'll start with where the most focus is this week, is basically on the euro. And these are weekly charts, so they're long-term charts. And we're going to click on it to go into our investor's view, which basically shows the weekly, which is the one black rectangle here, put into perspective of the daily and the hourly. So you can see here you have weekly, daily, hourly, and you can get a very quick glance at the trends in a matter of seconds. So at the moment we see that the weekly is still heading up. It's coming out of the base. It's still very early stages, but our envelopes are heading up, and so it is an early uptrend in the euro. When you speak about weeklies, you count in quarters, so that's the perspective over the next few quarters. Now over the daily, you're in a more mature uptrend. It's been going on for quite some time. There's still some potential in there. If you look here, we could still make it up above the 138 level. Now on the daily, we're counting in a matter of months, but it's getting to be quite expensive. As you can see here, the risk index is in the red, and it hasn't turned yet, and it would really need to come out of the red to signify a reversal, but it's getting expensive. Now if we go back to the hourly, well, the hourly has gone into a sideways movement for now a bit more than a week. We are, as it's labeled here, in a corrective down move. Corrective down doesn't mean that the whole trend has reversed, but we've entered a period of consolidation. And as long as we keep above the 133.22 mark here, we're only in a corrective move. Now if we were going to move below it, now we could consider an impulsive move, and we'd have to review the daily chart to put it into perspective. But at the moment, we're still in quite a lateral consolidation. Daily is still heading up, so we'd still be positive on the euro over the next few weeks, next few months. Now, let's go back to our mosaic and maybe go through all the other items here in an investor view format. So again, we are on the Australian dollar here. You have weekly, daily, hourly. We're still in a long-term downtrend on the Australian dollar against the dollar. It is intermediate bottom. We're close to intermediate bottoms, hence the reaction, because we're quite low and the oscillator is in the oversold zone, has started to turn. But we believe there's still another few quarters to go, so this reaction is of intermediate effect. Now if we look at the daily, the reaction can be seen much better here. It's been going on now for about 2 months. It's still a corrective move up, and we really need to make it above 95.80 here to create an impulsive move. So it's a correction in line with what we see on the weekly, and at some point, if the weekly is correct, this chart should start rolling over again. Now the hourly, in a consolidation at the moment, very similar situation as to what we have on euro dollar, and the levels to watch here are the 92.23. So as long as we stay above that, the daily is still moving higher in what is a correction. Now back to the mosaic. Cable is quite similar. We'll move quite quickly onto it, meaning that here it's still a consolidation down. That means the trend is pretty much in the middle of the range, and it hasn't been able to turn back into an uptrend as with the euro. The daily has made it above the corrective targets, and you would have potential to move up to the 163.50 level. It's also getting expensive, so on a short-term basis you might see a bit of consolidation. And for the time being, the hourly is still heading up. It is in It has been expensive once already, it's getting expensive again, so it might follow the other two currencies into a consolidation move. Now looking at gold, as you know, we have been quite negative on it since the beginning of the year. We did show the nice intermediate bottom that we had from the end of June. If we look here, our weekly is still heading down. We are intermediate bottom levels. We're oversold on the oscillator, but we still believe there's a few quarters down, very similar to what we have on the Australian dollar. And the correction up is only a correction up for now, and would really need to make it above 1420 to make it an impulsive move and cast doubts over the weekly. And then for the time being, we're moving lower. It's not a clear resume downtrend signal on the daily yet, but the longer this downtrend on the hourly lasts, the harder it's going to be for the weekly to make it back above the 1420. And so there's no sign of this new reaction up for the time being on the hourly. So we will keep our scenario on the daily that at some point gold is going to roll over again and come back to its weekly trend. Won't spend too much time on dollar Swiss because it's very similar to euro dollar. I'll quickly have a look at dollar yen.
This has been quite interesting. We've received comments of late that investors are in fact turning back to the yen as the safe haven currency. What are we seeing in terms of performance?
Well, for now, we don't see much of it on the charts. Basically, what you have here is still an uptrend. It's quite the opposite as to what you see on gold, on Australian dollar, etc. We had a strong intermediate bottom, and we believe we're in a consolidation period. But we don't think the weakening of the yen is over, as for now. Now, one thing happened. We have been in a long-term consolidation. It's been going on since mid-May. It really kept within its corrective targets. It's nothing alarming yet, and usually these moves end into a resume uptrend. However, it's been lasting quite some time. If you see our target zone here has been, we've gone a bit too far for it. And so in that respect, we may start asking ourselves the questions, is this not the beginning of a reversal? And if we look at the hourly, it has confirmed that it's gone impulsive down. It's already oversold, but in general, the picture is not alarming yet, and we will trust the weekly for now. Now, if we look at quickly the S&P,
and again, this has been quite interesting. Converse to performance trends for the rest of this year, the S&P 500 is in fact now outperforming the Dow Jones.
Well, in general, it's been a very strong market for equities, as we pointed it out all through the year. We don't believe it's quite over yet. There's still some potential up on the weeklies. We are at stress. We are well in the red, so it's a distribution zone. It's a dangerous zone. There's probably not much more money to be made. The big moves are behind us, but it could linger on a bit, and we think that's actually what it's going to do. The dailies are still well positioned. The hourlies, a bit of uncertainty here as we've gone through the corrective targets down. So if you're a bull here, just wait till this move comes to an end, maybe in about a week or so. But we believe there still is a potential for new tops, possibly next year. But it's a dangerous game now. And if we look at bonds, here we go. We're in a correction down. This is the 10-year Treasury future. It's not a secular move yet, and we cannot confirm it yet. So at some point, as long as we stay corrective here, we do have a chance to resume an uptrend and resume a bull market in bonds. But for now, this is a weekly. It's negative, although it's only correctively negative. You must watch out. And it seems like the short terms, well, the medium term, the daily is still heading down. And all we would be having here is an intermediate correction, as we labeled it a few weeks back, and it still has a bit more potential to go, but we're slowly getting to a well-priced environment.
Jean-François, thank you very much.
Thank you very much.
The Dukascopy TV team will be bringing you all the latest on those central bank rate decisions and more, so stay tuned. Goodbye for now.